It is the power law. And I first heard of it in late 2019. And, it kind of was an aha thing for me because it looked like such a good fit. Once you put it onto a log chart, it becomes pretty apparent, as long as you're willing to accept that the volatility is substantial. So it clicked right away, and then I just kind of pursued working with it, and I learned pretty quickly and got connected with Giovanni Santostasi, who was the original discoverer of this power law relationship for Bitcoin, that back in 5 years prior to that, so a dozen years ago now. And just keep monitoring it, and it's held up. And I think I've got a slide that shows you how the power law index has been very, very consistent over the past decade.
Can we take a look at that?
And just to mention, we're in the process. We've now founded this Scientific Bitcoin Institute, and Giovanni is the director, and I'm the associate director. Headquartered in California, set up as a not-for-profit, but we're going to have substantial operations in Europe as well. Here's some agenda. I want to start out with a couple of kind of broad philosophical ideas. One is that we have an absolute monetary standard in Bitcoin. And the other is a word you probably haven't seen before. I had not seen it before a month or two ago. Autopoiesis. And Bitcoin is unique. It's the only cryptocurrency that really adheres to that, and gold and fiat do not. And I will show you why. And then an introduction to the power law and the distinction of that from what exponential behavior is, which is much more typical of traditional financial assets. And why a power law is good, because it speaks to the stability of a network. So it comes from the network, and a network provides stability, and it ends up kind of channeling things into a power law. And then I'll show the distinction between the power law core and the bubbles that we get. I'll show you evidence that the bubbles have gotten smaller over time. And then I'll talk about the periodic timing. People have talked about 4-year cycles. I assert that there has never been a 4-year cycle, and that people were just conveniently ignoring the 2011 bubble, which was just as significant as the others. And I'll show you that log periodic timing gives a better fit.